Good morning, everyone. We are live now. Manish, you may need to, yeah, we are seeing your email.
Yeah, sure.
Good morning, Manish bhai.
Good morning.
How are you?
I am fine.
Good to see you. Nice.
Thank you. Give me 1 minute. We'll set up. This is not coming. That.
Manish, you want to start?
I want to start. I am just trying to, do it. Open my both the PDF. Can you see this PDF now?
I can only see a folder wherein you have these PDFs.
Okay. Can you see now that IPO tracker?
Yes.
IPO tracker?
Yes, we can see that.
Okay, so at least I have kept some. I have some two presentation I've made today. Let's see whatever we can do. Let us start our session today. So, good morning to all. Special conclave today, Meet the Experts Think Tank. A very warm welcome to all participants. Myself, CA Manish Mahendra Sanghvi, Think Tank Multidisciplinary Global Platform. Chapter leader welcomes you all to Think Tank Global Conclave for India Growth Story and Meet the Experts series covering in detail management think tank, valuation think tank, IBC think tank, financial reporting think tank, Veva Cooperative think tank, FAFP ISA think tank, IPOs think tank, and capital markets think tank as a major part of think tank at Vivek.Patra. Vivek in Sanskrit means knowledge and wisdom. Patra is an innovative news updates containing slides on sharing latest developments and real life examples by CEO, CXO, in finance, corporate affairs, industry, and profession. Think Tank has been in existence since over decades. Idea for conceived on 6th January 1991 to have a conferences, conclaves with CEO, CXO, CFO, panelists and specialists sharing experiences and real-life examples. Our panelists are finance leaders working in reputed companies or professions since many years. They have deep domain knowledge. Think Tank platform now digital has got overwhelming response globally on digital mediums and expanding rapidly through LinkedIn and Facebook, etc. Our participants and experts have rich experience in industry and profession who have done ICAEW, CPA, CFA, CFP, IIM, CA, CS, CMA, ESA, DISA, FRM, IFRS, BTech, Masters, and PhD, sharing their experiences, knowledge, wisdom spreading as a reach out initiative globally through www.thinktanks.co.in and in spite of limited resources. Due to overwhelming response to our annual reports, corporate strategy and ESG, we have announced 6 P awards and recognizations, that is profit, people, planet, professionals, promoters, platform for corporate annual reports, analysts, professional achievers, CEO, CXO, CFOs, with a very respected jury with a rich experience in interaction with stakeholders and boards. The recognitions and awards would be announced with a rigorous process of scrutiny and choice and interaction with the participants and would be given digitally and if possible in a well-located auditorium in Mumbai like Yogi Sabhagriha or similar when available subject to pandemic rules. As participants are aware, recently we have launched a much awaited reference type of newsletter appropriately titled Think Tank at Vivek.Patra, India Growth Story, a comprehensive conference material compilation over 600 pages sharing experiences by CEO, CXO, CFOs and specialists with latest developments and series on blocking and regulatory frauds, financial reporting and IndAs, IBC, taxation, digital, capital markets, technical analysis, ESA, bank audit, corporate affairs would be available for subscription and any ethical contributions by well-wishers, etc. We will also be covering important and latest development as suggested by many participants in coming weeks. Example, valuations and financial modeling, health is wealth, cyber security, blockchain, MSME, etc. We request all to subscribe to Think Tank YouTube channel for watching summits, conclave webinars, and join, connect, and network on Think Tank webinars group on LinkedIn and Facebook pages. Telegram channel specially created on suggestions of many participants and panelists. We once again welcome all the members and panel, share few insights on Vivek, Think Tank at Patra India Growth Story. I especially thank my colleagues in the digital global team, Anupam, Aditya, Ajay, Anurag, Archana, Aishwari, Hemant, Mitesh, Mihir, Malvika, Nipun, Nishchal, Pramod, Praveen, Rakesh, Rucha, Pramod, R. Kannan, Manish, Santosh, Subrat, Snehal, Sandeep, Unmesh, Vijay, Vikas, Yogesh, and others for regularly contributing to Think Tank at Vivek.Patra. Today we have excellent Think Tank multidisciplinary platform seminar, eminent stalwarts and specialists sharing their experiences and latest development. Let's have an interactive event. Thank you. We are welcoming all once again. So shall we start today's session? Shall we start today's session? Actually, I have a two presentation. One is IPO tracker. See, there are around 50, 60 IPOs have come. What is that in 2021? And what is their, today's, what price they have issued the shares and what is their, listing price on the listing day and what is their status today? Because we have covered in last 4 to 5 months around, I think 15-20 IPOs presentation in our seminar. So can we go through, can we start with the IPO tracker, which will take around 20 minutes if we have a discussion on this?
Yeah, Manish, please go ahead.
Yeah. Then we will go on LIC IPO. So we start with the IPO tracker. I would say around 60, 14, 6. So around 60 IPO came in last 2021, and in 2022, that is first 2 months, 3 IPOs have come. This is our team members details. This is our standard disclaimer slide, which says this presentation is only for educational purpose. Everybody has to have their investment advice or research recommendations from their own consultant, their stockbroker, etc. And we are not responsible for anything. So I have covered around 12 slides for this. How many IPOs? Like we start with the latest IPOs was Vedant Fashions Limited, which came on 16th Feb 2022. The issue price was at 66. Listing was 934 by giving 8% return on the listing day. Current price, maybe Friday price, is 813 rupees. So we are losing 6%. So this way, of course, this data is downloaded from the website. But I have only added the 52-week high-low price. The company which I follow week to week or month to month, and I look this company's results also quarter to quarter. So I have highlighted those companies which I follow. Adani Wilmar, we did a presentation on this also in our regular seminar. I personally like this company, and my opinion is that this company will become the number one FMCG company number one FMCG company in coming years. So anybody want to ask any question, they are welcome. Other good companies, Superior Life Science, which is making bulk drug, and they are exporting to almost 50-60 countries. It's a Mumbai-based company, very good company, but right now it's it's above 40% than the listing issue price of 274. Data Patterns is another company. It's a software company, and it's a good company based in Bangalore. And it is also, right now it's a price to price issue. It's trading its issue price, but high was 864 and low was 575. So it has given a good gain after listing. C Info System is basically a MapMy India. The issue price was 133 and it went up to 1900 rupees. Still it is given 32%. As on date, it is giving 32% return on its issue price. Latent View Analytics is an artificial intelligence company based in Chennai. It's a profitable company. Issue price was very low, 197. And the subscription was highest among its all public issues. And it is giving almost 90% return as on date over the issue price. The 52-week high was 755. So people have roughly earned 3 times those who have got allotment and sold above 700 rupees. In this slide, there is no company 197. We know Paytm. Sapphire Food is this pizza company. PB Fintech is another financial company. Finobank Payments is another financial company. So these are like Aditya Birla Fashion. I am holding in this company today. Also, I bought the shares after public issue also from the market. Issue price was 712, and today it is trading at around 500, giving negative returns of 30%. This is the fourth largest mutual fund, like asset management company in India, after SBI, HDFC, and probably Kotak. This is a good company in long run. Maybe it's a safe investment now because prices come down to, very at the bottom level, basically. Paras Defense, very small company located in Navi Mumbai, Maharashtra. A very small public issue of approximately 125 crore was there. And the highest ever subscription it got. Like against 175, the highest 52-week high price was almost 1272, so around 1250. So people got around 6 times returns if you compare high 52-week high price. And their products are very good, and company making lot of products for ISRO for for a satellite work.
Yeah,
All
Manish.
companies we have done a
Manish.
presentation. Yeah.
Yeah, morning everyone.
Good morning.
Just to in a very nice presentation. You have compiled a lot of data. Now I just have one question between Paras Defense and MapMy India. Which one is better?
Yeah. MapMy India is more better because it's a software company. You can hear me, right?
Yes.
Yeah, because okay, my headphones, I have some problem. I will correct it because the reason is very simple, sir. MapMy India is helps to track the maps in all the vehicles, in all the other utilities. So it's long run, they have better margin. And second thing, Paras Defense is solely depend on government orders. But if Paras Defense gets orders from all foreign companies doing all space research, then it is also a very good company. The margin should improve. But I feel that Paras Defense is a family-owned company, is lacking a professional touch. That is
right. Great. Thanks.
Sanseva Engineering Limited, another good company. They have 13 factories in and around Karnataka, Bangalore. Some companies are out of Karnataka also. They are making very good, they are OMI products, making products for all the automobile companies. The issue price was 744 and right now it is trading at 661. Negative 11% return is there. This company is also very good in long term. In this slide, there is no company which I follow. Our trade, we know that it is giving 70% negative return.
Car trade and PTM have gone for a toss.
Yes, you are right, sir.
Achha, Devyani surprisingly is having still a premium.
Devyani is still making premium. That is really surprising. Maybe you can see it's a consumer-based company. Now its margin are very high compared to other, in this segment, and they are better placed. Another thing is issue price was only 90 rupees. They have come out with a comparatively good price. Glenmark Life Science in another is good company. They are providing better results last quarter. The issue price is 720 and right now trading at 446, giving 38% negative return. This is really a bit surprising that why this company is giving a negative return, because promoters are good. The promoters are Glenmark Pharma, which is a very good company, we all know. And but I personally, I have bought shares after listing also. And I personally believe this company will make a good, after some time, price will go up because based on purely on performance.
Yeah, Manish, see, we're looking at all these companies' prices, now a lot of companies are engineering companies and all.
Yeah.
and they are still quoting high even in spite of this market meltdown. But these two companies, Glenmark Life Science
Yeah.
and AB, asset management. Now they are having good promoters and very good business and all that, but still they are about say 30% plus minus. And the 30% odd minus than the issue price is surprising. Now in case of
Yeah, this is
Glenmark,
really very surprising. I personally, because I have seen the results also, they are very good. They have posted good results.
yeah,
And
good results, good business,
meantime,
good promoters, and minus 35% is not
good.
a small thing.
You are right, but unfortunate. But I would say that sir, अगर fixed deposit में पैसा डालना है तो इसमें पैसा डालना better है.
See, Glenmark, in Glenmark, there was one more point that the issue was basically to repay the loan, 800 crore loan, which they have repaid to the parent company. So the interest liability is not there now, and they have got some funds for expansion as well. So with that, I think, and plus they are in a good business line, but still minus 38% is really surprising.
You are right. Minus 38% is very bad.
Anyone has any view?
Sir, shall we go ahead?
Yeah, please. Because I thought if somebody has any view, but then nobody has commented. So you can please go ahead.
Dushyant, which company you mentioned?
I mentioned, Manoj, the life science, Glenmark Life Sciences.
Okay. Here we have to consider also the current geopolitical situation. A lot of pharma companies have exports to Russia. So they have been impacted.
No, but Manoj, this company, after listing has not done well. Except for the first or second day of listing, it has gone down the listing price and is going down only.
True,
Russian thing is only just a couple of days before.
Yeah, that is there. But this company came when there was a strong hype of pharmaceuticals. So the valuations were at the peak. So after that, okay, it has underperformed continuously.
And what is your view about AB AMC?
Which one? AB AMC.
Yeah.
ABMC was actually overpriced. It went down to about 600 odd levels, and now it is consolidating, and it is considered a value buy. In fact, I would like Mr. Murtaza Kachwala would be here with us anytime he is here. We would love to acknowledge and his contribution at his helm. Murtaza Kachwala, sir, are you here? Hello? Anytime he is here, just acknowledge, he can speak anytime. We can acknowledge his contribution. He has been expert of sharing his views and insights with all the participants.
Shall we go ahead?
Yeah, carry on.
See that another good company, Clean Science and Technology. This is also giving good returns over the issue price, almost 100%. मनोज सर, आपका आवाज आ रहा है शायद. But I think there is some problem somewhere. 1 minute, just give me 1 minute. Yeah, can you hear me now? Hello?
Yeah, clearly.
Oh. Sir, so Clean Science and Energy is another good company, but I think not to invest in this company right now, because it is already giving right now also 100% return, and with 52 high was 2,700. This GR Infra Projects, who is also a good company, it's an Ahmedabad-based company. Offer for sale came, and it Interestingly, lot of people have able to sell more than 50% gain. People have got. I also got 50% gain by allotting. I got 2 allotments of company. So sometimes offer for sale also gives us a good return. Generally, we feel that offer for sale is not a good, thing to money. But all it depends. Sometimes you earn money from offer for sale also. Like we all know, Sona BLW. It was 291 issue price. It went down below the issue price and went up to 700-800 rupees. Right now it is 596 by giving 100% return. This Craftsman Automation is another company supplying to all automobile company products like this. And this is also good company. Lakshmi Organic. I have invested shares after public issue also in this company. I got allotment also. Issue price was 130. Right now it is 371 rupees and giving 186% return. The higher price was 628. I have a plan to hold for a very long term, at least for 2 years, and looking at 8 quarter results. And this company is making some good products which are like monopoly products. It's a Mumbai based company, and from my side, MTAR technology, another software company having some kind of spatial software. It's a Hyderabad based company, and it is also giving almost 190% return over the issue price of 575. Storecraft, it's a, the brand name is Pigeon, making all household utensils. It's a Bangalore based company. We have not presented a presentation on this, but it's a good company. If you see a Hawkins Limited, Hawkins is a same company and a peer company of Storecraft. So because of urbanization happening in India, this kind of companies will make a good progress over the period. IRFC is a good company. It's making some projects on behalf of railways, and it's provide finance to the railway company. Equity is very high, but there are a chance that company will make good progress and investors will earn good money out of it. So with this, our small presentation is over. If anybody has any question or anybody wants to, discuss about any company, we can have a chat.
Yeah, Manish, I got one point.
Yes, sir.
See, the thing is, these issues have come when the market was doing good, right?
Yeah.
Yeah, so I would say 2021, right?
Yes.
Last about couple of months, hardly any issues because the market is subdued and because of these latest geopolitical development, possibly the new issues are still not looking like coming, in the pipeline, except say the huge issue of LIC. So it will be interesting to see now those new issues, they come at what price they come and how they perform post listing, because all these companies which you have listed, you have made out such a good working. They were all in last 6-7 months, 8 months, and the market was going up and it was a good market condition. So it will be interesting to see how the issues which will be coming now will perform in the market and in the valuations as well. And later on we'll talk about once you finish your LIC presentation, then we'll talk about its circumstances under which or what's the possibility going forward.
My personal opinion is this. सब LIC के आजू बाजू एक महीने तक कोई IPO नहीं आएगा.
And that looks like.
Because LIC will take away all the money.
Yeah. Till the refund comes, I think nobody will venture.
Nobody will venture. And I also feel that all the people will get a probably allotment. Maximum people will get allotment, or at least every PAN number will get allotment out of it, minimum. And if you see the issue price of LIC 2000 or 2001, one can hardly get 7 shares, right? So there won't be any selling. There won't be any selling in these shares. Another thing is, if we look at it, we will discuss in LIC. So I just want to tell you, Dushyant bhai, okay, these IPOs which have come in 2001, there are certain good companies are there. We can, even we will discuss the, results of this in our next seminars also. But some companies are really very good. Over the next 3-4 years, some companies will become a blue chip. Definitely. Like I like Lakshmi Organics. I like Sansera Engineering. I like Landmark Life Science. These 3 companies. I like Aditya Birla Sun Life AMC. I'm to be, as a disclaimer, I'm telling you, I'm holding 300 shares now. That's all. I look after this 4, and Adani Wilmar. Of course, I got 3 allotment, and I sold a lot also now. So this 5 companies I following up in my portfolio. So this is my view.
Right.
So just I am sharing my views with all our people. Okay. So sir, anything else? Otherwise, we shall move to the LIC.
So, Manish bhai, this is Santosh.
Good morning.
Good morning. Good morning. So,
Santosh, welcome. I would like you to do your presentations on Hdfc Life and other companies. LIC IPO, we can do it later after we understand the current companies, if that is okay.
No, I just need to put together a couple of things. Maybe we can take the LIC one earlier. My question actually was for Manish bhai. Geopolitical developments since last couple of days. How do you see the IPOs being impacted?
सर ये ज्यादा लंबा चलेगा तो फिर LIC का IPO को प्रॉब्लम definitely. But in today's what I have seen on television, probably Russia was thinking we will crush the Ukraine in 1 or 2 days. It is not possible. And I think by Monday they will sit on the table and discuss. But we can see that Ukraine has lost lot of things, and we can say that Ukraine has gone back 5 years. Now it will take for Ukraine 5 years. The good thing is that one person, if you see the 2 sides of the coin, somebody will say Biden, he has not kept his word by helping Ukraine.
Exactly.
But other side of the coin, if you say if US have jumped in this war, there could be a world war kind of situation would have happened.
But at the same time, I agree, Manish bhai, but at the same time, now nobody will be able to trust USA, right? Because
sir, definitely
there are many countries in the world who don't have their own military power and are dependent on NATO or USA for their army, right?
Now everybody will go for Parmanu weapons.
Yeah, exactly. So now if you look at say for example Taiwan, जिसके पीछे China पड़ा है. Now this will embolden China to invade Taiwan and even maybe Indian, the Arunachal Pradesh border and all those things. So I think there will be a weapon war, and people will have to build their own military strength. They will not be able to depend on other countries.
So every country will provide more money towards defense expenses.
Yeah.
Definitely.
do you see the federal increasing the rates in the US?
Well,
Manish bhai, you're on mute.
Okay. So definitely there will be more defense expenses in coming years for all the countries. Your opinion is very much clear that now no country will, trust America, because that we have seen in Afghanistan also, the way American people have run away from there. Though they have spent a lot of money in last 20-25 years, at least they should have taken all weapons, all the machineries, all the things which they have just thrown, which is now used by Afghanistan government, is wrong actually. Whatever you say is correct, sir.
And the sanctions that people have, put on Russia, I think Russia has one of the highest foreign exchange reserves today, because they had prepared for this since a long time. And Europe, particularly Germany, is dependent on them for gas, for oil.
Yeah, 40% gas of Europe is being supplied by Russia.
Which is why today, even today, the European Union has not put so far any sanctions on Russia.
That is
US ने रखा है, UK ने दिया है, Australia, बाकी सब countries ने, Canada ने वगैरह दिया है, but European Union is still, confused. So I think
that depends.
What complicated the situation हुआ है उनके लिए.
So it's a interdependency between the countries makes a big difference basically.
Correct.
And I know my son is Germany. He says around 40% gas is being supplied by.
Correct.
But if you see the major issue, like what Putin thinks, I personally believe he's thinking on the guidelines of Xinjiang, China wala. Because usko, what the message, Ukraine is very, very, rich in certain. एक तो यूरेनियम सबसे ज्यादा है वर्ल्ड में उसके.
शेरनोबिल वो है, न्यूक्लियर वो है उनका.
तो बेसिकली पैसे का खेल है ये. Plus Russia wants to increase their territory like China.
Correct.
Sir, let us see the chat messages. Yes, Santosh Maller, what is your opinion on Zomato, Paytm, Policy Bazaar, Nykaa? अपने को अनूप सर पूछ रहे हैं. अनूप सर, can you open your video? See, I actually in our presentation in Paytm, when IPO came, we had an exchange of ideas and we thought that iska price 1000 रुपए से ज्यादा नहीं होना चाहिए. Now the price has come down below what the price we thought. Policy Bazaar and all these things all depend on future because they are all technological company. Nykaa, the platform is good, but I believe their margin is very, very thin wafer margin hai uske. So iski sustainability in long term is difficult because of two things. Ek to uska margin kam hai. Second thing, they will have a very big competition in coming years. So I personally feel Paytm, Policy Bazaar, Nykaa, I will not invest money at this price. Zomato is, as far as Zomato is concerned, I don't buy shares of liquor shares and non-veg shares. So I don't look at it such companies. Anup sir. Please invite. Prakash ji, good morning. If you want presentation, we can give it. There is no issue. You can call me or you can have my email ID. No problem. I can share with you.
Thank you, Manish sir. Can you just put your email ID on the chat so that I'll take a note of it?
1 minute.
Thank you so much.
You are right. CA Manish 95 G. Okay, Prakash sir.
Thank you so much, Manish sir, and very informative session. Really appreciate it.
Thank you very much. So shall we move? संतोष जी, संतोष आप अगला करेंगे या मैं LIC चालू करूं?
नहीं, आप LIC चालू कर दो. I'm just still downloading a couple of documents.
Done. We can see the screen of LIC insurance, LIC IPO analysis.
Yes, yes.
Right. I just want to tell what is my thoughts on LIC. If we see traditionally, if you compare book value, earning per share, or issue price compared to the book value, then this issue is very, very costly on very higher side. But looking at insurance company, its valuation is different than the traditional company, whether it is a manufacturing company or software company. So let us look at it differently. And this is the biggest company in India, the world 5th company in insurance sector in worldwide. So let us start. LIC IPO should come around 10th of March or 15th of March. This is our team members detail, as we regularly share with all. They are all helping in this seminar, or they are contributing content in the seminar, like me. Standard our disclaimer, so everybody has to go through it. What we are doing is for educational purpose. It's exchange of thoughts, exchange of information, exchange of individual thinking. LIC, as we all know, from the childhood, we have heard this name, heard this concept. Before privatization, this was the only insurance company in India which was doing a life insurance business. It's a Mumbai-based company, and the promoter is the President of India is the promoter. LIC is the largest insurance provider company in India with market share of 66% in a new business premium. Company offers participating insurance products and non-participating products like unit-linked insurance products, saving insurance products, term insurance products, health insurance, and annuity and pension products. As of 30th September, it is a total AUM of 39 lakhs crore. 39 lakhs crore is much more than the total AUM of the mutual fund industry, I believe. LIC operates through 2,048 branches, 113 divisional offices, and 1,500 satellite offices. It's not only operating in India, but also operating in Fiji, Mauritius, Bangladesh, Nepal, Singapore, Sri Lanka, UAE, Bahrain, Qatar, Kuwait, and United Kingdom. So it's the biggest company of India. LIC is a part insurance and part investment product companies. It's take money as an insurance premium and do an investment in various sectors. LIC has 13.5 lakh agents. LIC has a highest trust in public for both life insurance as well as investment done with them. LIC manages assets of 39 lakhs crore. This is more money than the entire mutual fund industry combined in India. They invest these funds across stocks and bonds. They own 4% of all listed stocks in India and more government bonds than the RBI. So in terms of purchase of bonds, it's a bigger company than even RBI also. They have a range of life insurance products to meet varied insurance needs of an individual. And it's a 5th largest global insurer by gross, return premium, GWP. Challenges are there. Though company is very big, 5th largest insurance company worldwide, it has also a lot of challenges. We all know this. Now competition is there. LIC has a poor new policy growth, typically working as a government company, as they continue losing market share to private insurance players, especially in urban areas. So urban areas, they lose their market share to the private insurance companies because of aggressiveness of the private insurance players. The margin in insurance plus investment product is low. We can understand the bond yields have come down in last 5 to 10 years, like interest rates. It's a very difficult to value LIC as the business model is unlike any other company. LIC collects money upfront and then promises to compensate policy holders at a later stage. The premium they collect cannot be recognized as revenue. This I have not understood actually what it means. Because if you see LIC, what typically, we will discuss this point. I have some point in my mind about premiums collected. So far, any question is there? Dushyant bhai.
I don't have a question, but then I got a answer to your question.
Yeah. If you have answer, you can tell me now. No problem.
No, you're talking about these premiums not being considered as income.
Yes.
See, the thing is, premium is taken towards future liability. You know, you are taking premium, but you are then undertaking the risk also, that in case something happens to the policy holder, then if it is a insurance product, then you have to pay the life sum assured. If it is a ULIP, then you have to return the whatever is the growth in the fund, and you have to return. So only some percentage of the premium only can be taken as a income.
Okay.
Yeah, because these are basically, they have say somebody has taken a policy this year and it's a life insurance, and then next year he dies. Then even though the premium is collected for 1 year, they will have to repay the full sum assured. Okay, so they have to also recognize that liability. So the full premium naturally will not be taken as an income.
But if you see typical working of between the private insurance and the LIC, you have seen that if you see LIC, simply you pay a premium and they don't deduct any charges. Whereas all private, if you go to private insurance like Bajaj example, they will like example, you are paying 15,000 premium a year for a particular policy, in which they will deduct around 2,000 towards their administration charges, towards mortality rate, and something else also.
Yeah, that is in the ULIP they do.
In the ULIP, all policies they do. I think term life insurance also they do like this.
Yeah. The both. You see, the thing is, term life is only a risk. Now, normal whole life and endowment policies are risk plus investment, whereas ULIP is a risk plus investment. So I think IRDA specified certain guidelines on the basis of which they would have to take certain percentage of the premium as an income.
Correct. So that is the difference between the collection of premium between LIC and other private insurance, right?
No, even other private insurance companies also, they also cannot take premium as an income. There is a IRDA guideline, because they are also in the same boat. They also have a liability, right?
Right.
They may specify certain charges. Beyond that, the premium amount cannot be taken as a income.
Yeah, that's right, Manish bhai. So basically, it is premium what you're receiving is partly current year's income, partly future year's income, so to say. So therefore, absolutely. I mean, as Dushyant ji rightly put, it is not entirely income for the current year. It is to be spread over the number of years.
Okay. We are moving ahead. Face value is 10 rupees. IPO price could be 2000 to 2100. At 2100, one can invest 7 shares, not more than that. So, if किसी को लगता भी है, तो I don't think so he will sell shares so fast. So, and I think almost more than 50-60% shares of the total IPO will be allotted to public, general public. Look like, this is my understanding, my assumption. See, what is the primary business of company and the industry? LIC market share is 64% in terms of premium, 66% market share in terms of new business premium. So new policies, they are capturing still 66%. 74% market share in terms of number of individual policies issued. 81% market share in terms of number of group policies issued for fiscal 2021. So still their market share is quite up, though there is a lot of penetration in the market, and almost more than 24 life insurance companies have come, have started their business in India. So
they
about
doing, Manish, they are doing very well in group policies. See, group gratuity, group annuity, these policies are basically, to cover the company's liabilities. Now the group, these gratuity policies are really very popular, and those companies who are having as a their work conditions that they will be giving some annuity to the people employees after retirement, then they go for the annuity policies also. So till the life of the retired person, the annuities are given, and the sum assured, the principal amount is given to the legal heir. So these products are doing very well in the market because there is hardly any competition in these group products.
Correct.
Sir, my name is Nitin Panchal. I'm a
Yes, sir.
accountant.
Good evening.
Good morning. I just wanted to know one thing, but the biggest challenge for LIC will happen, according to me, a post issue, because right now they are offering only 5% stake via this IPO. So to comply to the OFS guidelines in the next 2 years, they will have to sell balance 20% stake.
I will address that.
Okay.
The government has a special, they have a plan. Although now there is a special dispensation for PSUs, they are allowed to do gradually. But if this IPO is a success, the government apparently has a plan to divest 5% every year for the next 5 years. This will also help the fiscal situation and also the appetite of investors. But this is a wait and watch situation, because these are large IPOs which India has not seen so far.
Yes, yes.
But the other countries are able to do large IPOs. Other developing countries, they have done very, very huge IPOs. If it is a success, so this is only the trailer. What they say, no, abhi picture baki hai. But as far as the regulation is concerned, regulations will be modified to suit the economic and market conditions at the time. But hopefully it will happen. And market cap of India, which is now in the top 6, is expected to go to top 3 in the world. And LIC IPO and other divestments will help this process. Yeah, carry on.
Okay. So currently there are 24 life insurance companies in India, with a life insurance corporation being the sole public player. The size of the Indian life insurance industry was 6.2 trillion on a total premium basis in fiscal 2021, which is up from 5.7 trillion. So roughly 10% jump is there in 1 year. The industry total premium has grown at 11% CAGR in the 5 years ended fiscal 2021. So we can say that 11% CAGR for the whole industry is a very good sign. Like this, Chrysler Research forecast that the industry total premium to grow at 14 to 15% CAGR over the next 5 years to reach close to 12.4 million trillion by fiscal 2026. So today we are at 6.2 trillion, which will be reached after 5 years or 4 years, whatever, to the 12.4 trillion rupees. So this is probably because of the Indians have habit to save money for the future, along with the insurance product kept in mind by all the individuals, basically.
I would mention that this is a very, very important point. 14 to 15% CAGR in insurance, with a huge unpenetrated population, is a big carrot for all investors. Among the fastest growing insurance industry in the world, and very, very profitable, huge market share, and often valuations are based on VNB and VNB margins, value of new business. And if Chrysler report says 14 to 15% after a proper study, it's a very, very strong point in favor of the insurance industry, both the PSU sectors and the private sector, and particularly the LIC, which has a very strong foundation and highly profitable, and which can become much more profitable once the private sector investors come in, and there would be pressure to perform and reward all the stakeholders. It will become a board managed company. Carry on.
Yeah. So this is performance of the LIC. I see only thing is equity shares have increased from 100 crore to 6,300 crores. This is because of they have issued a bonus shares, and that is why their earning per share has come down. Net asset value is just 12 rupees, was as I mentioned, or as we understand, the book value has no consideration for this kind of business. So for me, company LIC is very sound, made a good net worth. Their policy holders revenue account is also quite high. So that way, profit after tax is also good. And let us not go by the only book value, but there are a lot of consideration for the IPO price.
I would add a few things. These are historic legacy numbers. Insurance companies are valued on the basis of embedded value, and as per the RHP valuation by actuaries, embedded value is coming to about 5.4 lakhs crores. And apparently in the roadshows, projections of about 6.75 lakh crores for the next year are going on. And insurance companies are valued in multiples of embedded value of between 2.5 to 4 times. And if embedded value of 5.4 lakhs or 6.7, if you multiply it by 2.5 times to 4 times, it shows a valuation range anywhere between 10 lakhs crores to 20 lakhs crores. Another thing is, as far as profitability is concerned, as of now, the P&L numbers of LIC were not driven by profit motives. Although it was allowed to share 10% to shareholders, 90% for policyholders, it continued its old policy of keeping 95% for policyholders. And now, with the change in the objectives, the profit is expected to multiply significantly over 5 times easily, and much more with the growth and value of new business. Santosh, you are there. Some thoughts from you on the financials of insurance companies?
No, absolutely, Manoj. I think a very strong legacy balance sheet as such. If you look at the policy holders' income, this is what this is what 33,000 crores, right? So this is in middle. In fact, yeah. So and shareholders' account is also quite strong. In fact, in terms of financial reporting, of course, I'll come to that when I talk about the results, SBI Life and HDFC Life. But IRDA has yet to, so IRDA has been deferring IndAs transition, and with IndAs transition now, all listed companies need to have IndAs application, but IRDA has of course deferred it for good reasons. So once this transitions to IndAs, then it will have some accounting challenges. Since Manoj, you asked about financial reporting aspects. But having said that, LIC will have its certain typical issues which other insurance companies may not, because of legacy issues and all that. Because it's sitting on investments in many companies. It's one of in fact, LIC is largest shareholders in many of the Indian companies, listed companies. So marking those investments to market, and the implications of that on policyholders, revenue account, and shareholders will there is an interplay with that. So parallelly, the government has also been working on certain changes in the LIC Act, because then so we will see how these things progresses. Now they are not holding it up for IPO because IndAs they have deferred for the time being. But absolutely very strong balance sheet. But one thing is, Manojji, once they get listed, then that quarterly, the performance of their portfolio, investment portfolio, reporting that on a quarterly basis, that will be something that we will have to keep a tap on.
That will be very interesting to see quarterly numbers. I hope they disclose everything mark to market, and also the value of new business comes. So it will have to change the culture, which the chairman has said they are already going digital. So that it will have the advantage of both the agency force and digital, and value of new business, which Crystal reported 14 to 15% growth. If it grows to that level or faster, that will be really having a significant impact on the future financials, and embedded value will keep on going up. So with more 15% growth, if it happens in value of new business, renewals are there, but new premiums are coming in. So it will be having a significant multiplier over the thing. The main questions as far as IPO is concerned, fundamentals and intrinsics are good. It's a question of demand and supply of shares, with so much supply coming. So world is there to absorb. It is not only the policy holder. So we'll have to see what really happens in the realignment and the geopolitical situation. India moving up the curve, which is seen from the markets in the last week and yesterday also, and next week also. India is getting re-rated. The signs are clear.
There is a question from Dinesh Kotecha.
Yeah. We will discuss contingent liabilities.
Yeah.
We will.
Yeah, Manish.
Yes.
Before that, on this slide only, can you throw some light on this increase in equity share capital from 100 crore?
According to me, there is a bonus shares, or some shares have been taken by the issued to the President of India.
Yeah, but that's a huge increase, because
huge increase, 100 crore to 6,300 crore. Yeah, 63 times.
Yeah. So that have they given any note in the prospectus, in the DRH?
We have to check.
Acha, and similarly, the last line, total borrowings.
हाँ
वो 2,70,000 then 2,53,000 and
Yeah.
suddenly it is 3 crore. That in what kind of borrowing were there and how suddenly they were reduced? I mean, they repaid or it's only accounting adjustment?
Or did they issue shares against it?
Look like they have issued shares against it. As of, that such things will come out only in annual reports whenever they will publish. In 2022 they have to, na?
Manish, they have to explain in the these red herring prospectus, because these are the big numbers, like 2,53,000 crore becoming only 3 crore is a huge thing. And in that, in borrowings, and first of all, somebody has to understand in the first place why the borrowings were there or what amounts were classified as borrowings. And this increase in share capital, and you see even a net worth is also increasing, but not in line with the profit. It is increasing much more than profit. See, profit after tax, if you see, last year was 2,900 crore. Now 2,900 crore, and they would have given some dividend to the government. So it will be less than 2,900 crore increase in the net worth. But if you see, the net worth is going up from 6,500 crore to 8,000 crore. Now, how, I mean, I don't know. I would say, if you can throw some light on that.
Dushyant bhai, we will keep these points pending. Means we will look into and we will discuss, because this public issue is still away. It is good we are discussing, so we can clear certain points what is in our mind actually. You are right. But as such, their prospectus is RHP is very good. And they have given a work to this company, which has done very good work about insurance business. I would say that if this LIC IPO is successful, then in 1 or 2 years, you can see many companies will come for public issues out of these private insurance companies. There are 24 companies right now. They will all use the CRISIL report. CRISIL has made very good report for LIC. They would have paid handsome money, maybe in more than 100 crores look like. They have spent a lot of time and big energy to put this report. But I will keep this point in my mind. We will explain this in next meeting. We will have some time spent in next Saturday for this query. Okay, sir. This is the carrying value of LIC investments. They have put almost 99% of their investments in India and very little in international market. So roughly they have 39 lakhs crore with them as an investment. The next slide gives a bifurcation basically where they have put money: central government securities, state government securities, other approved securities, then equity. So roughly 24% money is parked in equity, which is a 4% of the total, investments of listed companies. And they have a maximum money with central government securities of 37% and 24% with state government securities. So there, if you see, their major part is with central government and state government securities, which is roughly 61%, and 24% in equity markets, and balance in other loans, debentures, etc. Dinesh sir, this is your query. Contingent liability. Major contingent liability is almost 2,000 crore, rather 24,000 crore is contingent liabilities towards the income tax. They have a lot of income tax assessment pending with income tax department. and there is no much details in this red herring prospectus. I think all other contingent liabilities are normal contingent liability, looking at the volume of the life insurance policies that is being managed by the LIC. So any comment on statutory demand?
Comment means what are the chances of this getting converted into actual liability?
But sir, क्या फर्क पड़ता है? गवर्नमेंट दोनों गवर्नमेंट डिपार्टमेंट ही है.
अरे गवर्नमेंट को फर्क नहीं पड़ेगा, ऐसे LIC शेयरहोल्डर मेरे को पड़ेगा ना.
Correct. You are right. Any adverse thing. You know, if the demand of income tax is proper department, then there will be some kind of dent will be there in LIC's performance.
Because 25,000 crore is a big money, because their net profit is in the range of around 3,000 crore.
Correct.
If you see last 3 years, it is 2,700, 2,900, like that. So it is something like 8, 9, 10 years liability. I mean, somebody has to look. I would say it's a major negative point.
So this is another point where we have to do research before the IPO comes, right?
Manish sir, I have got a query that in the liabilities which was the latest year, last year, earliest year of the liability, earliest year, is it 1975, 76 or something? In that entire of that, the first item.
1975 का liability है, ऐसा आप बोल रहे हैं?
It must be spread over several years, ना? What is the first year that liability contingent?
RHP में देखना पड़ेगा. आप अगर बोले तो मैं RHP अभी दिखा सकता हूँ सबको, but it would become too lengthy.
Because what will happen? What will happen is if it's very sticky, like 1981 or 82, then I mean, why those are not solved? That the reason has to be found out.
This must be lying in high courts.
But whatever is the point, my point is that this contingent liabilities are like a hanging sword, on your head. It may come in your favor, it may not come in your favor. If it does not come in your favor, as a earlier brother said, it may be a or that liability will have to be acknowledged then in the books, as a loss.
Yeah. Correct.
So, being accountants, we should be conservative, I think.
There is one chat where LIC has given that our borrowing decreased from 2 lakh crore as of March 20 to 36, 3 crores, primarily due to IDBI bank borrowing no longer being considered as subsidiary. So Dushyant bhai, this is the answer to our query.
Yeah, please come again.
See, one of our members has given on chat that our borrowing decreased from more than 2,50,000 crore as of March 2020 to only 3 crore, primarily due to IDBI banks borrowing no longer being consolidated as a subsidiary. So पहले शायद IDBI को consolidate करते थे तो पूरा borrowing को दिखाना पड़ता था. In 2021, IDBI is no longer remained a subsidiary.
I think IDBI still remains because there is no.
शायद सर 50% से नीचे हो गया होगा शेयर. मैं आपको बोलता हूँ IDBI में शायद प्रेसिडेंट ऑफ इंडिया ने इन्वेस्ट किया है अभी, या तो और कोई फाइनेंशियल इंस्टीट्यूशन ने इन्वेस्ट किया होगा, जिसके कारण LIC का शेयर लेस देन 50% हो गया होगा. And it has become associate, not the subsidiary.
Yeah, it may be possible that there would have been some capital infusion by government of India.
Correct. So आप ये हम लोग ये बोल सकते हैं कि LIC ने अपना वो liability निकाल दिया basically in consolidated accounts.
So liability see, Manish, against liability, there would have been some matching asset entry also, no? So which was that account which has got affected?
So investment इतना बड़ा है ना, 39 lakhs करोड़ का investment
है. It's a consolidation issue. So when you consolidate the balance sheet, the assets also come, liabilities also come, but these are not insurance liabilities, as IDBI Bank is declassified as a subsidiary. So insurance corporation doesn't have borrowing. It has been clear. In fact, it's good the participant made it very clear. It's a consolidation issue. Please carry on.
Yeah, that's fine.
I think we have to go to industry analysis, which is very vital, and we'll come to each and every issue.
The only thing I think is these contingent liabilities, the income tax claims, that remain as a hanging sword.
Yes.
Well, it's a standard practice to show every demand at a lower level. Ultimately, it goes into appeals, and they are settled in favor. So in the notes of accounts, I think they always mention clearly. So when the assessment is done, final judgment, at the time it comes, and these are effectively minor issues. Let's focus on the industry issues, how the industry is different from manufacturing and service sector. And I think, Manish, you have a lot of data on that.
We have no problem.
Yeah.
We will discuss another half an hour. We have that much material with us.
And we are looking forward to Santosh sharing his deep dive insights into private insurance.
Only thing is, Manoj Bhai, I differ for your opinion about income tax liability. This is a very big liability. So if I become a shareholder of this company, I will definitely like to study this before applying the shares.
No, you study this, but this is a standard industry practice. It applies to all the companies.
But the figure is very large in LIC. That is the point. Correct?
Certainly.
We are moving to another slide. In insurance company, persistency ratio is very important. So I put the data in this slide. They say that persistency ratio decreased in proportion of business that is retained from the business under return and is measured in terms of number of policies and premiums under return. For example, our persistency ratio by individual business in India is in the 13th month was 72% as at March 31, 20 compared to 77% as at March 31, 2019. So basically, I could not understood this 13th month concept, but I can understand that persistency ratio is going down. Like it was 79% in the 13th month to 61st month, 59%. So this is something we can say a negative from negative point or positive point. I don't understand because
this is a negative point clearly.
Ratio is, but sir, persistency ratio is going negative. It's going down for all the peer companies. If you see, even median of top 5 players, it was 87% in 13th month to 54% in 61st month. So it is negative or positive. I am unable to understand. This is very new concept for me. So what is your opinion, sir?
It's a very clear negative. It's a very clear negative. There are more and more insurance companies going. So maybe hard sell by agency forces going on to achieve their targets, and then leave aside the policy holder who can maybe switch over to another insurance company. Persistency ratio is supposed to be over 80-85%.
But if you see SBI,
maybe there is a mis-selling of policies also just to achieve the targets. Why policy holders are not staying with the company?
Manoj Bhai, if you see other companies, SBI, Hdfc, ICI, Max Life, these are the first 5 top companies in India. Their persistency ratio is also gone down substantially. If you see Bajaj Alliance Life Insurance, it has gone down to 42%, the highest ever, downside of any other company.
This is a very important red flag raised by you. It's a red flag. Even private insurance companies, public persistency ratio is going down. It's an important red flag to note. It's glad you are sharing all that.
Yeah.
And,
but Manish, my reading of this data on this sheet is slightly different. See, LIC 13th year was 79%, and Bajaj Alliance also it was 79.8. So comparable in 13th month, and Bajaj has gone down to 42. LIC is up to 59 in 61st month, right? So between the two, LIC is doing much better. Now, now we compare with SBI Life or HDFC Life, which are having say 87.9 and 91.7, means much higher persistency ratio in 13th month, and they have come down to 61 and 54 respectively. So even HDFC is worse than LIC because they started with 91, 91 going to 54. Now in case of SBI, from 88, almost 88 to 61 is something like 27% drop, whereas LIC, it is only about 20% drop. I would say percentage-wise, the LIC performance is still better than all others.
Definitely. You're right. I agree with you.
Lesser devil.
So it's an industry issue.
Yeah, it's an industry issue.
But LIC is a good performer.
It's an industry issue. It's an industry issue. Everybody is hard selling.
Correct. Because of competition. Value of new business margin. Value of new business margin is calculated by dividing the value of new business, expected profitability of new business return during the fiscal, divided by annualized premium equivalent, APE, 100% of first year regular premium plus 10% of single premium. The VNB margin for all the players improved substantially during fiscal 2016 to 2021. Among the players in the H set, HDFC Life reported highest VNB margin of 26% for fiscal 2021, followed by Max Life with 25%. But here the VNB margin is not given by LIC. The data shows not available. But HDFC is doing well. Max Life has done well, and Bajaj Alliance has also done well from 7% to 10%. So here you can see this LIC is lacking or information is not shared actually. So this is another point we need to see before the IPO comes, or they may give a additional information before the IPO. Solvency ratio is improved from FY19 1.6 to 1.83. I would say everybody has gone up. Solvency ratio is defined as excess assets over its liability. Minimum solvency ratio set by regulator is 1.5 times, and everybody is above the 1.5 times of assets over its liabilities. So LIC, every insurance company has improved their solvency ratio. Very new to me, added value. Again, in prospectus, LIC has not given any embedded value. And if you see billion, like Manoj Bhai said, this is a 5 lakh crore. So 504 billion rupees, 504 billion has come, right? So LIC has an embedded value of 504 billion. 504 billion rupees.
What is this unit?
Whereas all SBI, HDFC, ICICI, they are much below down.
Unit क्या है ये?
Which units?
ये 224 या
embedded value, company का embedded value निकालते हैं.
Embedded value.
So this is INR billion.
INR billion, okay.
This is billion. See, SBI has a 220 right now 352 billion rupees. So like Manoj Bhai said, na 5 lakhs crore is the embedded value as on date of LIC. So it's a 504 billion rupees, right? So something like a valuation comes of embedded value. I think this is another point we have to discuss in our next meeting. Like what is embedded value for the insurance company?
Yeah, as Manoj has explained, if this is the most important thing, then why they have not given?
Maybe I have missed, probably. I should have put a definition of it.
The embedded value is given in the actuaries report, which is a part of the RHP. It's a separate report. You can have a look at it. And valuation is done currently every year. So this in the budget, when the IPO was mentioned, after the post-budget discussions, the finance ministry said embedded value will come out before the IPO. It came within 10 days of the budget, and it is a part of actuaries report. It is mentioned in the RHP. One can look at the report. Carry on.
These are the three companies, peer companies are listed in India right now. SBI Life Insurance, Hdfc Life Insurance, and ICICI Prudential Life Insurance. These three are private players. They have a very good results. Their accounting and presentation is much better than LIC. You can say the prices are very high compared to their book value. Their P ratio is also quite high. Since this is the insurance sector, we cannot at least I'm not in a position to justify or to think that the IPO price of LIC is proper or not.
Manish, I got a question here. Manish, can I see these figures are as of, I believe, March 21?
Yeah, March 21.
Okay, in that case, net worth of LIC may not be correct because they have given some bonus and all that in September. So return on net worth would not be 45.
Return on net worth may not be 45. But net worth is equal to equity plus reserves. So any bonus given.
Yeah, that's why the base would have gone up. No, after from March to September, whatever earnings
base would have gone up.
Yeah, because they might have issued at a premium. Who knows? Because the increase is from 100 crore to 6,300 crore. So the return on net worth may not be 45 as of say September end.
Let's see, net worth का भी एक slide है मेरे पास, तो उसमें देखेंगे कि September का net worth कितना है सर.
Yeah, because sometimes
there is an important thing here. The financial net worth as reported has no meaning. What people look at is a net return on embedded value, and the return comes from the legacy premiums and a new value with that business added, which numbers are not there. So it's very important we consider the VNB, that data, once you have that, and what is the return on embedded value. That is a key parameter for valuation of the shares. Unless you have the data, you can't work out. You need embedded value, you need the VNB, new business added, and the VNB margins. These are the main key factors of valuation for insurance company. So a deep dive into that has to be done. Look at the actuary report, and they need to, like the embedded value, they came by 10th of February. It was not disclosed because of the legacy requirements was not there for a company to spend money on valuation for embedded value. It is essential for listed companies. So VNB margin is also essential, and that is the return we need to calculate based on embedded value at the rate at which embedded value is growing. Now they talked about the 5.4 lakhs crores for FY21 embedded value. and there is a talk going on about the embedded value for FY22 being in the range of 6 maybe 6.5 lakhs plus crores multiple. But that actuary report needs to come out of the projected embedded value. Also, the discussions, the roadshows which are going on with the foreign institutional investors and institutional investors, because they have access to this data. This data must come for valuation, and as of now, not the legacy numbers of a very small equity capital. And one more point of profits is concerned. We talked about profits versus equity and historical financial net worth. The profit as of now, also it has been mentioned, IRDA came out with rules where insurance companies can take 10% for shareholders, 90% for policyholders. But LIC continued its conservative thing of rewarding policyholders with 95% for policyholders. Now they had said that they will be reconsidering and applying the same benchmarks with the private sector is doing, because the people will consider the valuation of private sector companies with LIC, which now would belong to all stakeholders. So that number of shareholders going up from 5% to 10% will be a significant multiplier. So the historic profit will multiply by at least 5 times. At least 5 times, maybe much more.
But in that case, Manoj, the attractiveness of the policies will reduce. So you are taking away 5% from the policy holder and giving it to the shareholder. Then why the policy holder will then go for these LIC policies, because now that they may not be favorably considered. In that
there will be earlier this thing was not there. Now there are clear guidelines. All the insurance companies, the same parameters are applicable, like the solvency ratio of 1.5. All companies have to keep it. So this is insurance companies. It will make all insurance companies comparable.
Yeah, agreed.
Of course, the policy holder always has a choice to go to any insurance company.
That's what I'm saying, that they will be all comparable. So it will be good for the shareholders. But then what happens to the policy holders? The new policies, a lot of policies, they compare, anyone buys a policy, they compare the similar policies of 3-4 companies. And suppose LIC was coming out better, now they won't come out better because they will be taking away 5%.
No, you have a point, but what the policyholder would look at is the pricing of premiums, benefits offered, and claim settlement ratio and speed. So on these parameters, claim settlement ratio and speed, the pricing of the policies and the benefits, this will be the key area for comparable. Then investors has a choice, and if the industry is growing at 14 to 15%, let it compete on equal parameters. So on the financials, there will be a like-to-like comparison. And as Santosh mentioned, as of now, NDAs for insurance is deferred. The sooner it comes, the better is it. But in that case, not only the Indian private and companies and LIC should be compared, all the global insurance companies, also China and American companies, should be compared on similar benchmarks.
Let's see how it goes.
Now, India has most conservative policies for insurance. And we have seen the market cap of, we'll come to much later after Manish presents the presentation on industry. The market cap of Chinese companies and American insurance companies is much way higher. And considering the demographics and large Indian population and a significant saving habit, so LIC needs to be among the top 50 corporations in the world in terms of market caps, in terms of its potential and conservative accounting. So we'll come to that after we look at the whole deep dive into industry.
Correct.
Yeah, but I can add one thing.
So
that recently there was an occasion for...
tell you.
Yeah, Manish, 1 minute. After, recently I had occasion to compare LIC Jeevan Akshay with a couple of similar policies of other companies like Hdfc and Kotak and all. And in the terms of premium and all, LIC was much competitive, lower than the other two. Now, if they are not giving that 95% to the policyholder and it comes down to 90, the premiums will definitely go up with the similar policies. That was I was hinting at. So let's see how it fares in the future.
True, but what they have said is premiums will not go up. Actually, premiums may even become more competitive. They are going into digital, so they'll be having significant cost savings, and they are keen to have a larger opportunity and grow. So time will tell, but this will improve the efficiency. And
definitely when it goes to when it becomes public limited company, it has to perform well, no doubt about it.
So many questions will come, so many interesting questions are being asked. So all the investors will ask many more questions with the management, and they will have to comply and give more disclosures and improve efficiencies.
Yeah, definitely. So we are not comparing here net asset value and the issue price. This is just a prepared for the information. Yes, Dushyant bhai, as you said, for the 6 months, return on net worth was around 18%, not the 45%.
Okay. So that's guess stands corrected.
Yeah, your guess and your understanding is very clear. Even earning per share makes no big difference. But in this case, if we calculate P ratio would be very high for insurance companies. The average cost for the President of India is just 16 paisa per share, making a very good money out of it.
Almost free.
Almost free, sir. And it is still it has a 63 crore shares. No, it has a 63 crore nahi sir, 632 crore share अभी भी उनके पास है. After IPO of 31 crore share बेचने वाले हैं, तो 632 crore में से 31 crore share President is selling today.
Correct.
So still it will remain 95% shareholder of the whole company.
Correct.
This is all taxpayers' money. You are the owner, so it's a matter
definitely.
of pride. You are making so much money.
See, this is the reason people are waiting for the IPO of LIC. These are the typical types of life insurance products, byproducts, and customer types. A chart is given. This is typically marketing slides where what kind of policies they are issuing. Nothing to do with investments.
This is very important slide. Very important.
Giving us information of all global players. United States, China, Japan, India, United Kingdom, South Korea, Malaysia. These are all the big countries compared to India. If you see the market share of within the country is still the highest ever among its peers. LIC is holding. If you see SBI Life is also a very big company, I would say that. Though it's a 8% market share in India, it's a big company. China, but no company is holding more than 20% share in their own country compared to LIC. This is another slide showing global position of Life Insurance Corporation. See, LIC is the 5th largest insurance company in terms of total assets or total life insurance premium collection. After Germany has #1 company, Alliance. China has 2 company, Italy is 1 company. There is no big company from US or UK in this list. The first 5 companies are from Germany, China, Italy, and India. This is the slide employees of the company. LIC is on date having more than workforce of more than 1 lakh, out of which 50,000 are in operations, 21,000 are in sales, assets and office services are more than 10,000.
Will there be any change in this reduction in the employees number once they go digital? Once they go digital?
Sir, वो तो दुष्यंत भाई common है ना, as in when company goes on digital. So number of workforce is going down in India for all the companies.
Yeah, because the hallmark of say all these PSUs like SBI and this LIC and Air India is that the manpower is on the much higher side. So if they want to be competitive, not only in terms of policies and premiums and efficiency, but they have to also look at the number of employees comparable.
Yeah, correct. I fully agree with you. We have to see this. Okay. So maybe workforce will definitely come down in coming years. We can see it from the annual report. So I with this slide, my presentation is over, but I promise to, look into a lot of matters like equity shares, net worth, loans, even number of employees, change in number of employees over the period. And we will discuss this in next Saturday, definitely. Any question from any member? Like one member has posted, he would like to discuss the net worth of LIC with its peer company. Definitely net worth of LIC is much more higher compared to the peer companies. If we see net worth is higher of SBI is much higher than the LIC. LIC's net worth is 6,000 crore, whereas SBI net worth is more than 10,000 crore. So private players have more net worth than the LIC. In terms of business, LIC has more business than all other private sector insurance. So any
would like Santosh to now start would like Santosh to start his presentation on the private sector insurance companies. Santosh?
Sure. Yeah, Santosh, carry on.
Sure.
Thanks, Manish. Very good compilation.
Thanks, Manish bhai. As usual,
thank you very much.
Insightful.
We will do open house after Santosh's presentation. We'll address all the issues.
Manish bhai, sure. I think I'm not able to share the screen. I think some.
1 minute.
Yeah.
I will give you.
Acha, Santosh.
Yes, sir.
Yeah, just for information, what all you are going to cover now?
So what I have been asked to cover is the Q3 results of 2-3 large insurance companies, like I've picked up Hdfc Life and SBI Life.
Right.
And certain NBFC companies also, like I've picked up Hdfc, Bajaj and Manappuram.
Right.
And a couple of SEBI latest orders on, we said, IPOs and NSE. We'll have a short discussion on that.
NSE pe, results we can cover. NSE pe, once we start, then probably it's difficult to stop.
Yeah.
We can keep
I agree. I fully agree, Santosh. So first you cover the results, then we'll see.
Okay, let me start with, is my screen visible to all now?
Yes.
Okay. Thank you. So first we'll start with Hdfc Life. This is the Q3 results of Hdfc Life Insurance.
Santosh, sorry, if you can make it full screen.
I'll do that.
That the right side arrow, that in between, that arrow, if you can click the right side. After the last column, niche. I mean, between, see. ये आपका जो राइट साइड का जो है ना वो एक्सपोर्ट पीडीएफ एंड ऑल, ये देखो तो मिडल में एक एरो है, मिडल में वो पार्ट जहाँ ना जहाँ पार्टीशन है वर्टिकली, जहाँ पार्टीशन है, पार्टीशन अभी मिडल लाइन, हाँ कम डाउन, हाँ वो एरो को क्लिक करो.
ओके,
हाँ फाइन,
Done.
Okay, thank you, Dushyant ji. So basically, this is the HDFC Life Q3 results. The top line consists of gross premium for first year premium, renewal premium, and single premium. Basically, if you look at the numbers there on the the December 21 column, the net premium income is this is in 12,000. What is it? This 12 lakh. This is in lakhs. So this is 12,000 crores, right? So this is 12,000 crores. That is for current quarter. So on an annual basis, if you look at the last column, this is 38,000 crores. So just gives you some perspective, since we were talking about LIC earlier. It gives you some perspective of relative to LIC, where does this company stand, or as compared to HDFC Life, where is how big is LIC? In terms of income from investments, we have 1,981 crores. Total contributions of fund from shareholders accounts 69 crores. So total income is about 14,000 crores. Coming to the cost side, commission again they split it up into first year renewal and single premium. So commission and plus rewards. So net commission cost is 507 crores. So you look at the operating cost. Of course, operating expenses for insurance companies very as relatively it's less as compared to its commission cost and its top line. So you have expenses of management of 2,000 crores, and then you don't have any doubtful debts. So overall, you have net surplus of 184 crores after all the expenses, all the income, etc. So on a top line of 14,000 crores, we have 184 crores of net surplus. So as per the IRDA norms, they are required to transfer 5% of their net commission income, net premium income into policy holders accounts, and a certain portion has to be transferred to shareholders accounts. So that appropriation they have done. They have also, they have an interim bonus paid of 199 crores, almost 200 crores. They have terminal bonus paid of 235 crores. And therefore, total surplus is basically 618 crores. They also have to give shareholders accounts. So this is again a kind of an appropriation. So they have transferred, so current quarter, they have transferred from policy holders to shareholders accounts of 182 crores. So we are talking about a profit before tax of 275 crores. Annually, it is 13,500 crores. So this company is basically, this is, in comparison to LIC, it's I think 1/10 or maybe it's obviously smaller as compared to the figures that we were looking at in the previous session. They have given certain ratios like Manoj mentioned solvency ratios, etc. in the earlier discussion. So they have a solvency ratio of 190% during the current quarter at the December 31st, as against the the percent for 31st March 2021 was 201%. So, almost thereabouts. Expenses to management ratio is 16%, almost consistently. Policyholders' liability to shareholders' funds is 2,015 crores. And then, you have a EPS of annualized EPS of 1 rupee 35 paise, and annual EPS last year was 6 rupees 73 paise. They don't have any doubtful debts, so they don't have any gross NPAs, etc. So most of the ratios disclosed below are not applicable. Yield on investments on policy holders funds, without unrealized gains. For non-linked, it's 2%. So these are like all yield single digit, ranging between 0.5 to 4% returns. On an annual basis, of course, 8 to 9%, and at times with realized gains it is 16%. We were talking about persistency ratios earlier. Okay, they have given various persistency ratio. I'm looking at the ratio in Roman, small Roman 9. For 13th month, the persistency rate is, for the current quarter is 84%. 25th month, it was 74.2%. 37th month, it is 65%. 49th month, it is 60%, and 61st month, it is 51%. So it is reducing as the time duration is increasing. So this is basically, I think, more like a policy holder attrition rate, the opposite of that. So I think this is fairly healthy. What was, Manish, by the persistency ratio of LIC? How does this compare with that?
LIC was from 79 in 13th month, was going to 59 in 61st month.
Yes.
So it was lower for 13th month as compared to HDFC, but what was higher in 61st month as compared to HDFC.
Correct.
Okay, but उसी range में है मेरे ख्याल से, nothing very.
But LIC persistency after on 61st month was 59. That was sizable.
69, you are saying. Okay.
Sorry, 59.
59. Yeah. So, these people seem to have been improving. If you look at the table from the column, rightmost column to the leftmost column, period on period, they seem to have been improving their persistency rate for 61st month, because 21st March 2021, 31st March 2021, it was 48%, whereas abhi December 51%. So I think they are slowly, gradually improving their persistency ratio.
Santosh, possibly one thing coming to my mind, nowadays there are quite a few policies where the premium payable is only 5 years.
Yes.
So after 60 months, the premium of that policy is not going to come. I don't know how that is factored in here.
So if you look at the definition,
there are also single premium policies that also have an impact.
I'm sorry, Manojji, say that again.
There are also single premium policies. LIC has a good share in that. That also has to be considered, but it's quite interesting. Key man policies, etc.
If you look at the definition that HDFC Life has given on the top, it says regular premium divided by limited premium payment. So if it's one-time premium, perhaps it's not featuring here. But I agree with you. If it's single premium, then it won't feature here in the persistency ratio, looks like. Another interesting ratio which they give is this conservation ratio, and I don't know whether the LIC DRHP had this. Participating life individual and group So 88%, again, this is on an increasing trend. Participating pension, individual and group, this is 78.8%. This is slightly declined as compared to March. Then you have non-participating life of 91%, and you have non-participating pension of 65%. So again, there is a bit of a declining trend here. Won't get into the health one, the non-life part. So this is HDFC Life. I'll scroll through the segment information also. So segment income, basically policy holders, they have again this IRDA format which they have to follow. So net premium income from investment and transfer from shareholders accounts. So again, they have various participating individual and group life, but then participating pension, non-participating individual and group life, non-participating life group variable. So various segments, again, as compared to March, or as compared to last quarter, the income from net premium seems to have increased. Likewise, the even for the other segments, there is increase in the premium income as compared to September quarter. Income from investments, of course, you can have a one-off income every quarter. So that was about the ratios, segment information. Let's look at it, some of its ratios. Okay, now debt equity ratio again is very minimal. It's 0.07. So insurance companies typically wouldn't have borrowings because their obligations are much more longer term. Debt service coverage ratio is 17.59, which is again very healthy. Interest service coverage again 17.59. Net worth, I'm looking at number 8, net worth of 9,190 crores. So okay. PAT of 273 crores. Again, EPS we discussed. So all in all, very healthy ratios. I don't see any concerns as such. This is, I think, after LIC, this is the largest life insurance company in India, I believe. Okay, so we'll go to SBI Life now. Okay, SBI Life, again, here we have gross premium income of, this is in lakhs, so this is 18 crores, 18,000 crores almost, 18,025 crores. You have income from investments of 2,400 crores. So you have total income of 20,458 crores. Commission cost is 614 crores. So net expenses of management is around 1,402 crores. So we are talking about surplus of about 236 crores. Then you have shareholders accounts. So total surplus of 260 crores after all the appropriations. And then transfer from policy holders account of 168 crores. So you have total At PAT level, this is 364 crores, bit better than HDFC Life, what we saw. We will look at the ratios here. We have solvency ratio of 2.09, expense management ratio of 7.72. Again, this seems to be better than HDFC Life, which was I think 16 point odd. Let's look at the persistency ratio. Where is the persistency ratio? Yeah, here it is. So 13th month, it is 79%. This is declining as compared to March. 25th month, it's 73%. Again, slightly declining as compared to March. 37th month, it is 68%. 49th month, it is 66%. And 61st month, it is 45%. So slightly less than HDFC. Number of policy bases for 13th month at 71 basis. So they have split the persistency ratio into two, into two types. One is based on the premium and one is based on the policy basis, number of policies that they have. So 71% to for 61st month, it is 35%. So again, as compared to LIC and HDFC, this is a bit on lower side. They have also given persistency ratio based on single premium for fully paid up under individual category. Again, it's 100% across the time buckets. Coming to conservation ratio, again, they have various, overall they have 82%, which has declined as compared to March. May it was 87%. So given the assets and the statements of assets and liabilities. Again, a very strong company in terms of capital adequacy and so. Any questions on the results that we have taken so far? Okay, I'll now move on to the NBFC results. I've picked up 3 NBFC results. First one is HDFC. Of course, I've picked up the standalone one because that's probably more.
Santosh, I have one question.
Yes.
What I believe persistency ratio, I try to understand what is month-wise. Probably it's somebody is like 10 people are taking policy and somebody is going out by not paying premium on 12 months, 13 months, 14 months. So something like that at the 63rd month it is premium is going down, something like that. Why it is decreasing? So decreasing is good or bad?
Because of COVID? I'm just wondering, because of the fatalities in COVID, or is there any insurance? These are life insurance contracts, right? So is it because of? There can be 2 reasons. One is the insured person is deceased, that is, he's passing away, or probably because he's switching on to a new policy.
He's surrendering the policy.
These are for lapses in policies. Sometimes the policyholder is not able to pay, and in some cases, the first year there is a hard selling of policies, and also sometimes mis-selling because the commission rates are very high. That is why after 1 year, maybe a 15 to 20% dropout. After that, some policyholders are not able to pay. So there are lapses. So in that case, when there is lapses, after certain years, if there is surrender value in that case, there is loss to the policyholder except for the tax benefits which have been claimed. It has nothing to do with COVID.
But in COVID, a lot of people defaulted in their premium payment, right? Because of which LIC and all came up with a one-time window to clear up all the outstanding so that policy don't, become lapse.
Correct.
So wouldn't that also have a factor in this persistency ratio?
To a very minor extent, not significant. Yeah.
And Manoj bhai, what happens if there is a death? Because if the person is deceased, then you will not get any premium.
No, in that case, he has to file a claim for settlement. He'll get it. It doesn't impact the persistency ratio.
No, but then persistency ratio, the way at least HDFC Life defined it, is premium divided by the number of the
policies.
30 policies.
Yeah.
Right? So
there are 3 types of policies. They said in terms of policies, in terms of numbers, because the numbers will be huge, and in terms of single payment, which is supposed to be 100% because there is no next premium.
Right. Okay.
We have to see this.
Yeah.
Okay. I think we have to spend some time next Saturday also.
Yeah.
On these concepts of all insurance companies following up, plus vis-a-vis what is happening in LIC.
Yeah, Santosh.
Yes, sir. Yes, Dushyant ji.
Now that you have compared these HDFC Life with SBI Life, and we have seen the LIC also. So, as a shareholder, which of the 3 companies is the best to invest?
I think we don't have comparables yet. We don't have the value of new business in LIC. Until that comes out, one cannot make a decision.
Yeah.
So one thing is there. These insurance companies, they will be re-rating after successful IPO of LIC. Definitely.
So it will benefit all the other companies also. Manish bhai, what you're saying is LIC IPO, once it comes, then there will be a rally in the stock prices of HDFC Life also. That's what you're anticipating.
Yeah, look like, definitely.
Okay.
Because, people will also compare before applying that which is a better company. If LIC is best, there will be a lot of applications. If LIC is not perceived to be that good, then the issue may not do that good. That's what my feeling.
No, Dushyant bhai, एक और factor है. See, most of the people now, if you see that LIC, the most of the customers are still from the rural areas, 2-tier, 3-tier cities, because their agent are able to sell policies. Private insurance are still in urban areas, correct? And you know what is happening? All these insurance agents are asking their customers to open Demat account, whether they are in rural areas or in villages. So I would say more people will put money from rural and village area in the public issue.
Let the pricing come. Let's move on to NBFCs, which we are discussing now.
Okay. Yeah.
HDFC
sure.
and Bajaj, there are many more.
Sure. Okay.
Yeah, go ahead.
HDFC, let's pick up the first one. Interest income of, this is in crores, so 11,000 crores, vis-a-vis annual interest income of 42,000 crores. So I won't get into the individual numbers. Total top line they have of 11,783 crores. In terms of I want to also talk about ECL here, expected credit loss, impairment on financial, that is the 393, which is again quite healthy as compared to some of the other NBFCs. So annually they have 2,900 crores, PBT of 4,000 crores, and PAT of 3,200 crores. So they have EPS on a basic basis of basic EPS of 18 rupees and diluted of 17 rupees. So They seem to have done fairly well. They have given notes for various things. Exide they have taken over. They had HDFC Life, had acquired Exide life insurance, and thereby it has become subsidiary. This Exide Life has become subsidiary of HDFC Life, and in turn of HDFC. So that is a non-organic kind of growth in the current quarter. HDFC Ergo also, they have the company has sold certain shares of HDFC Ergo, and which resulted in one-time gain, and basically that also had an impact on the results. So good growth. HDFC is basically in HFC sector. It is the top one. Okay, so nothing else to discuss here in this. Okay, let's look at some of the ratios. Net worth of what is this? 1,15,000 crores. Net profit after tax of 10,000 crores. This is on a standalone basis. EPS, okay, on a non-dilute, annualized basis of 55 and 54. So they have a very good, specific ratios. Now, one of the things when it comes to the NBFCs, one should look at is these ratios. That is the gross NPA ratios and the gross stage 3 ratio. Stage 3 is basically the riskiest of the three, categories as per, IndAs, as per expected credit loss provisioning. The entire loan portfolio is divided into three stages: stage 1, stage 2, and stage 3. Stage 3 being the riskiest, stage 1 being the least risky. So they, out of the total loan portfolio, 2.7% is stage 3, which is quite, quite healthy as such. And net stage 3 is 1.4%. Provision coverage ratio, that is the provision that the impairment loss that they have accounted for stage 3 asset, the riskiest assets, divided by the total exposure, at default is 48%, which is also quite, it's on a higher side. So which is probably, they are doing it on a conservative basis. Generally, as per my observation, NBFCs provide for stage 3 assets anything between 25% to anything between 25 to 35 or 40%. HDFC does a higher provisioning of, almost 49%, almost 50%. So that's quite conservative, I would say. Capital adequacy ratio of 22%, again, very healthy. Liquidity coverage ratio of 120%. It's a deposit accepting NBFC, so they have to have LCR also. So I think overall nothing in specific, no concern as such in terms of the results. Let's move on to Bajaj Finance. Bajaj Finance, interest income of 6,335 crores. This is the standalone financials I'm talking about. Total income of 7,500 crores. Impairment of 900 crores. So again, quite healthy. We have PAT of 1,900 crores for the quarter. So amongst the loans that I want to pick up on one loan, one note. Which was, this note. I'll come back to the ratios. So note number 11, this is in particularly has been a discussion point amongst all the NBFCs. this RBI circular dated 12th November, where the IRAC norms have been, have been amended. And despite of a lot of representations from, NBFCs, the RBI has persisted with this. Of course, last week they have certain portion of this, circular, they have deferred by 6 months. But basically, this has been a discussion point. Why? Because now what happens is, they have come to a scenario where there will be a daily NPA rather than a monthly NPA. So, for example, if there is a default that happens on, let's say, 1st of December, the NPA won't be declared on 31st of December, but it will be an NPA from 1st of December itself on that same calendar day. So because of this, clarification, or because of this nuance, a lot of NBFCs actually, they were grappling with the portfolio becoming NPA for the RBI IRAC provisions earlier rather than it was before this circular. So this has been, so many NBFCs have given this note in their results also. So what Bajaj Finance has said is that the company is aligned to the definition of default in number of EMI outstanding approach to days past due approach. So they seem to have aligned their policies. However, such alignment does not have any significant impact on the financial results, because generally, if the ECL provision is higher than the RBI provision, IRAC provision, then this change wouldn't have much of an impact. But if it's the other way around, then it would typically have an impact on the results also. Let's look at some of the ratios now. So debt equity of 2.87, you have net worth of 39,000 crores, profit of 4,000 crores, that is for the 9 months. Then you have gross NPA, that is stage 3 assets, ratio of 2.19%, almost similar to HDFCs. Net NPA of 0.98, very healthy. Capital CRAR of 26%, again, quite decent, and LCR of 170%. Again, no concerns here. Again, Bajaj Finance is a very strong, NBFC. So the last one I'll pick up for the discussion is Manappuram. Manappuram, of course, the portfolio is quite different as compared to Bajaj Finance and HDFC. It's, the one of the Muthoot and Manappuram are amongst the NBFCs, the top leaders in the gold loan, LAC, loan against gold. Interest income of interest income of 1,000 crores. There's a standalone financials I'm talking about. Profit is 259 crores. Here again, they have given a note on, this 12th November circular. The other ratios, I'll go from down to up. Liquidity coverage ratio of 69%. As compared to Bajaj and HDFC, we were looking at 160 or 120 or thereabouts. You had provision coverage ratio of 24%. In HDFC, if you recollect, it was almost 50%. Here it is 24%. A capital adequacy ratio of 30%. Stage 3 loans to gross loan accounts 1.36%. Net is 1.03%. Net profit margin of 23%, total debts to total assets of 67%. Yeah, so I won't get into much of consolidated, financial results, but any questions, any reactions we can discuss.
One thing to note is Manappuram, you mentioned it has very low provision coverage ratio.
Yeah. No, one of the reason for that, Manojji, is for lag for loans against gold. Typically, the LTV ratio, the loan to value ratio, is quite generally, as per the RBI norms, it cannot be more than 80%. So what happens is, even if you recover, let's say if the average tenure of lag is say 6 months, if you get EMIs for 1 or 2 months, you don't have much of an exposure. Why? Because you have gold, which is quite liquid, as compared to property, where you may be as against that. If you talk about housing loans or LAP, usme, despite of having good LTV, you may not be able to recover good values from those properties. Gold is much more liquid as compared to real estate, so वो provision coverage में काफी कम आ जाता है lag में.
What is the net NPA
of Manappuram? You're talking about Manappuram, sir?
Yeah. Net NPA.
I think 1% कुछ था ना.
The PCR is very low. Then net NPA should be below 0.25%. If gold securities can be encashed, so they should do it. 1% is very high in such cases.
They have net NPA of 1.03%. So, which is quite reasonable, I would say.
NBFC is much lower, although they are into home loans and mortgages.
Yeah,
so
that they have some parts of unsecured loans and mortgages also, but predominantly their portfolio is gold loans.
Right, carry on.
Any other questions or reactions? Dushyant ji or Manish bhai or anyone else?
No, sab ekdam. These companies are good, posting good results actually every time.
Yeah.
Yeah, they are the top of the group.
And they
Dushyant, just put your video on. Dushyant, put your video on. No?
They are really transparent since so many years actually.
Yeah.
Their accounting process, their presentation, their board meeting, their corporate governance, all are in very good shape basically.
But Manappuram, I think they have not been much affected by last about 8 or 10 months, reduction in gold prices.
Because they keep a very good margin, na?
Yeah, 20% as what Santosh said, as per Reserve Bank.
Rather, they must be keeping more margin. सब 1 लाख रुपए का गोल्ड के सामने 60-70,000 ही लोन देते होंगे.
No, I heard
an important point to note in this industry. IFL is going and taking away market share of Manappuram. IFL is going aggressively in gold loans, deep down in the rural areas also. So this is a trend to watch. How IFL is increasing market share and profitability and also market cap. And Manappuram has been losing market cap and losing some business because IFL has been very aggressive being a new player in this field.
There's a lot of competition, Manoj, absolutely right, in this gold loan, thing, because the tenure of loans are also quite short. It's generally 6 mahine ke aspas ho jata hai, 3 to 6 months. So customer retention is quite, you can have a lot of attrition amongst customers. Coming on NSE now. Should we discuss NSE?
Wonderful. Yeah. Everybody is looking forward to NSE.
Or Santosh.
Circular.
NSE may take long time. Are you with this SEBI circular?
Let's do the NSE. Yeah, we can do the circular on loss making briefly. And NSE, let's take out the order and we can screen the order, share the order, and discuss a few vital points.
Okay. Let me just pull out the order.
Hats off to our regulator for finally coming out with this order. It's really a landmark order and lots more to come. Our regulator has set the highest benchmarks to the world about the highest level of regulation in India. Let's do a deep.
But while I agree with that, Manojji, I feel if you look at this order and we'll read this order, despite of, this being an issue since several years now, I think this has been what we are talking about 2015 or 2014 or thereabouts. So since last 7 years, what investigation, so whether they have actually done any investigation, that's not coming very clearly, because if you look at this order, there are, hearsays and she said this, and they're quoting people and, they're sharing email, communication. But an order should be, they should have their version of it, isn't it? So this is looking more like a, a kind of a forensic report rather than order. So I think they are, while yes, I mean, some of these things are revolutionary, and the person who signed, the officer who would have signed this would have had to, would be a courageous person. But I feel they are somehow also trying to hide, it's not very clear what they have actually, what is the SEBI's view now. Because they have quoted, this rig, whatever that email ID and all that. So is everyone clear of what is happening, or should we have a quick, summary of what is, should I very, briefly put out what is this order actually saying? Because 190 pages this order runs into. So
I think Santosh, by and large, the background is known.
Yeah.
You may your first
So let's go deep dive. Let's go to all important pages.
Yeah. So basically this, so there was clearly a HR, this, the compensation package that Anand Subramaniam was, drawing, they have quoted that. And then you have the various things. So this is interesting. 9.7 in response to the said query of SNACO, the Mr. Chandrasekhar Mukherjee, the Chief People Officer of NSE, replied that to the Secretarial Department of NSE on query of SNACO that noticee number 2 and is not handling any KMP function. That is, noticee number 2 is basically, I think, Chitra, or is it Ravi Narayan? Yeah. So notice number 2 is NSE, number 1 is Chitra, 3 is Ravi Narayan, and 6 is Anand Subramanian. All KMPs directly report to MD and CEO of NSE. Hence, the role does not require approval of NRC or board, as is within the administrative powers of MD and CEO. The Secretarial Department of NSE then forwarded the reply of Mr. Chandrasekhar Mukherjee to SNACO on the same day. Notice number 2 in this result dated so and so. So it looks like this HR head had raised an alarm on the compensation package and the promotion, fast track promotion of Anand Subramanian, right? Yeah, again, this, if you look at, during the course of investigation into the issue of co-location facility at NSE, SEBI came across certain documentary evidences which demonstrated that notice number 1, erstwhile Chitra, had shared certain internal confidential information, that is the organizational structure, dividend scenario, financial results, human resource policy, and related issues, response to regulator, etc., with an unknown person by addressing her correspondence to an email ID. Okay, this email ID. So again, here what I was talking, this is what I was saying, Manoj ji, that this email ID can be tracked today. The IP address from which this correspondence happened, you can identify it to a person. So SEBI can easily do that, right? And then they have mentioned, the forensic investigation by Ernst & Young. On the issue of identity of the person with whom the correspondence was exchanged, letter dated so-and-so has drawn reference to a forensic investigation report, wherein E&Y, upon examination of the matter, has concluded that the said person was of notice number 6, NSE has also concurred. Okay. So again, this is, I think, quite sensational in view of the confidential and sensitive nature of the information. The same was not reflected in the minutes, right? So the minutes were inadequate. SEBI examination found that noticee number 2 was aware of such email exchange by noticee number 6 with an unknown person at the time in and around November 2016, which was brought to the notice of the chairman of the NSE board and the chairman of NRC in November 2016, and was shared by chairman of NSE with NSE board. So they were aware of the communication with the board was also aware. Probably the order says that the board was also aware of the communication with this email, Outlook email ID.
So board is totally exonerated by SEBI.
Is in order, not exaggerated by SEBI or any regulator. They have clearly pointed out, and these are red flags which has been raised. And it is very interesting to note that CBI has stepped in immediately. Very fast investigations are going on, arrests have happened, and also very clear conclusions are also coming in. It's going to very interesting, and very important thing is it is happening before the largest IPO is happening, so the world is aware of it. It's very important. Red flags raised. We should, as we mentioned, the person who has signed the order, it's very courageous of him to sign the order and come at the right time. Red flags are raised. We have to look at it in a positive spirit. Hats off to the regulator. The forensic report also is quite detailed. We don't have access to the forensic report, but apparently there are clear conclusions about who is the person who has this apparently sham email, and CBI has given clear conclusion after investigation. And this is unthinkable that such things are happening with the support of the government bureaucracy, and government needs to move fast. It has moved fast. Incidentally, now something has happened, and that fact it is happening before the LIC IPO and before the NSE IPO is very important. NSE has filed this looking at the IPO soon, and they were also they wanted to have super advantages single exchange listing of NSE on its own exchange, which is not proper. So it's very interesting, and good points coming out.
This is, from a corporate governance perspective, this is a total failure. Right?
Exactly.
Fact, if you look at the way this order goes on, NSE is the largest derivative exchange across the world, right? If I understand it correctly.
In terms of volumes, yes.
Yeah. So this makes us a laughing stock across the world, right? If the MD
that is what I was hinting at, that when even the board was knowing and they decided not to report, and once the matter goes to SEBI, it takes about 3 years to get come out with an order and all. I think the whole exercise, sounds very, very, I would say not giving any sounding to do any pride to the country.
Correct.
May I intervene?
Well,
May I?
Yes, Dinesh.
Yeah, put your video on. Yeah, before put your video on, please.
See,
Dinesh, put your video on before you speak. Yeah.
Somebody told me yesterday in very confidence, a very high person, that the SEBI's laws were overruled by the NSE official, telling that we have got instructions from Finance Ministry. So why we should obey SEBI rules? That was the main point. Somebody very confidential and official person has told me that the NSE management was of the view that we will not do what SEBI will do, we'll do what Finance Ministry will do. And that is why this fraud has perpetrated,
So that's right. If, there is this Sucheta Dalal's book on this entire thing. The book came before the order, by the way. So she, not just before, I think it was a year back. And she said, she says in her book that, Chitra could have just walked into the room of the finance minister or the SEBI head, the then SEBI head. So that kind of clout she had. So what Dinesh ji is saying, I won't be surprised with what he's saying.
No, but the plight of the people who believe in this, working of the NSE is now worrisome. We are worried now whether NSE is working properly or not, whether it will work properly or not in future, because this type of frauds are massive, and they will have a very, very bad effect on the mental investors also. In the long run, are we safe at the highest level? BSE and NSE. That is my question. Are we safe? And where to look for safety now? When the top brass of the NSE is doing all these types of nonsense and fraud, where is the safety for the small investor like me? I'm afraid. And I have been telling a lot of companies in the AGMs themselves, don't get listed on NSE. I have been telling this for the last 2 years. I don't know why. From some institution, I must be telling it. But I was telling so many companies in the AGM directly that don't get listed. Remain listed on BSE. It's good.
I agree. But the thing is that
Dushyant, please put your video on. Dushyant, please put your video on.
Sir, people are saying that liquidity for whom? For the FIs and the HNIs. For the small investors, we are at the mercy of them. If our crusade is to give justice to the small investors, we should take up this very seriously. It is not a small thing.
See, if small people have the ability to take up seriously, this would not have happened. These are the big people's game. And, SEBI may be doing many things right, but couple of things like this NSE episode and last year, so many new age technology company shares, loss-making company shares coming at a
let's focus on NSE only now. Most important thing is we talking about NSE.
Manoj,
one second. Let's okay.
But focus on NSE only. The regulator, their impression is created that people who are having they know the regulator, they are going ahead with whatever they want to do. Otherwise, who will explain this Paytm price of 2150 coming down to 800?
Let's not focus on other companies. Let's focus on NSE order only.
What I'm saying, I'm just flagging the issue. That
let's focus on NSE order only.
So same thing coming to SEBI only, no? SEBI order we are talking about. So SEBI, suddenly the impression is created. Now it looks like that sometimes they do slow paddle where they want.
Yeah, good point raised, but a slow paddle was happening. Ultimately, the order has come out. Things are in the open. This shows democracy is happening and democracy works. And but, ultimately, it takes
it has to be some time,
but it comes and what happens?
Time sensitivity.
That's okay. You have finished your point. You have finished your point. But you have to look at the point. Is coming out with order. CBI is doing investigation, and we know very transaction happening in China, Russia exchanges. In fact, nobody knows how they are managed. Even the US exchanges. We have to see the orders are coming. You have made a point. It's over. 1 second. 1 second. Let's complete. That made a point. We have to make more points. How we compare governance, investigation, disclosures in China, Russia, and USA. Have such investigations happened and such orders come? This is very high level of transparency happening. CBI is doing its investigation. Government is now in alert mode. What happened? Delay was there. Fine. But the point is, order is there for us openly, and which is posted in the late evening on the SEBI side. Heads off to the regulators. Regulation change. We know bureaucracy is there. Companies also, public sector companies. Now NSE is also. It is not listed, but there are private sector investors. Governance is there, but the quality of governance was raised. What the independent directors were doing, they were aware of it. They have to answer now. Deep dive investigation. Red flags has been raised in the order. So there should be further deep down investigation and conclusion. Yeah, carry on with the order. Yeah, there are many more points in the order.
Santosh.
Yeah, there are many more points.
Santosh,
let's look at it.
Santosh, just 1 minute. I just would like to say that Mr. Kachwala, our chairman of WRC, is there in the meeting. Can we have an interaction with him for 2 minutes?
Welcome.
Mr. Kachwala, if you are listening, he's actually muted and his video is not on.
Let's acknowledge the presence of the chairman.
Yes.
And Mr. Kachwala, he has been a regular participant and a speaker, particularly on the 4 Ps of technology in audit. And he's at the helm of affairs in the Western region.
Yes.
Heads off to Mr. Kachwala. Yeah, let's get on with the order. And Mr. Kachwala is welcome to come anytime.
Yes.
And interact in a technical session, and heads off to him.
Yeah. So, in terms of the other findings, basically also they have talked about the board meetings, etc. And they have, it seems that SEBI is basically saying that the board was aware of the exchange of information to this email ID. They have also mentioned names of a few, independent directors who are on board of the National Stock Exchange.
Can we have the names? Yeah, can we have all the names?
So I'll read out the paragraph. It's a long one. Notices have filed their detailed replies. So they have mentioned about various replies that the notices have provided. So notice number 1 then filed her written submission via email dated so and so. Further to requests made to advocates of notice 1, that is Chitra. Notice 1 was also granted cross-examination of Mr. Chandrasekhar Mukherjee, who was the the chief HR director, and Mr. Dinesh Kotecha to be scheduled on 8th of October 2021. On October 2021, cross-examination of Mr. Chandrasekhar Mukherjee and Dinesh Kotecha was conducted by the advocates of notice number 1 at head office of SEBI. So, these two gentlemen were also, they were also summoned to the SEBI office. Another opportunity of cross-examination of Mr. Mukherjee was through video conferencing. They have mentioned, they have quoted the sections of SEBI Act and SCRA. So this is interesting. After perusing the replies of the notices, I observe that most of the notices, particularly notice number 1, 2, and 3, are trying to trivialize the serious allegations made in the show cause notice in respect of market infrastructure institution and its key functionaries by contending that acts alleged against notice number 1 at the most amounts to violation of employee regulations of notice number 2, and the maximum punishment in is termination of from service, which is already happened. In this regard, I note that notice number 1 is a market infrastructure institution. It is a recognized stock exchange in terms of SCRA, blah, blah, blah. Yeah, so this is, as per the last annual report, NSE is one of the largest exchanges in the world and number 1 exchange in India. It is inter alia the largest derivative exchange in the world in terms of contracts traded, second largest derivative exchange in the world in terms of currency futures traded, and 4th largest in terms of capital market cash segment. We have quoted all the orders under SCRA. Code of Ethics. So what notice number 1 is contending is that if an employee or KMPs has violated provisions of SEBI laws and resigns prior to any inquiry or investigation or issuance of SEN, then SEBI has no jurisdiction over such person. In effect, that what the noticee is submitting is that if any person commits any violation of SEBI laws and manages to resign quickly before the stock exchange finds out, then such person can go scot-free. So basically the argument they have rubbished, saying that I have violated the employee code of ethics, etc., and that therefore maximum I can be sacked from my job. But she contended seems to be, her contention seems to be that she has already resigned. So that they have rubbished. I think CBI has issued a lookout notice for Anand Subramaniam and Chitra Ramakrishnan also, right, last week. They have also further, reproduced some of the extracts of the forensic, report.
Getting a copy of the forensic audit report will be very useful.
I think this is also very kind of sensational, right? This is basically they have reproduced some of the correspondence from with the that email ID.
Yes, interested parties.
Hence, I note that noticee number 1 submitted that for the past 20 years, she has sought guidance from the unknown person on many personal and professional matters, and therefore, it may suffice to say that noticee number 1 holds unknown person in very high regard and is influenced significantly by the unknown person. In this regard, I note that as per email dated so-and-so, the unknown person has stated to noticee number 1 that I had the opportunity to be a person on earth, then Kanchan is the perfect fit. Ashirvadam Chiromani. So this is all, it's getting into some kind of a, it's as though he's some, guru or yogi or something. So they have exchanged a lot of emails. They have reproduced some of the email IDs. And again, here, Manojji, what I contend is how can the SEBI order say unknown person, right? It takes, you have an email ID, you can track him through the IP address, right? You name that person, right?
Yeah, but the point to be raised is that tracking has to be done by the forensic auditor or crime branch. SEBI has ensured there is a proper forensic auditor. Red flags are raised, and the CBI has also investigated, and CBI has already come to the conclusion on who is the owner of the transaction trail. In fact, in the forensic also similar thing is there. The only thing is SEBI in order doesn't talk about the conclusion about the person who has access to information, but enough red flags have been raised, and incidentally the matter is now come out in investigation, forensic auditor has also given appropriate conclusion. CBI is also coming to appropriate conclusion. Investigations are going on, and the people we are talking about would be in custody, hopefully for a long time to come. And we are to see whether it is a code of conduct issue or a civil issue or a total breach of trust and criminal conspiracy to benefit some interested parties in a significant way, which can be in certain percentages of the huge volume about fiduciary benefits giving to them in the co-location case, and access to sensitive data ahead of time and profiting from those transactions. So ultimately, it seems the regulation may be modified and strengthened further to ensure protection of the what we say the systemic risk.
So basically, Manojji, what you are saying is this is a total regulatory failure by SEBI, right?
No,
because they could have arrested the person and they could have named the person in the order. Because today, SEBI Act, if you look at the SEBI Act, the powers of SEBI, it can very well, even arrest a person. That's, I mean, legally it is perfectly possible. It doesn't. You don't need a CBI for that, right?
It's not a failure by SEBI. SEBI has done a limited investigation and come out for order for punishment of the culprits, and some limited punishment is there. Ultimately, now if people foresee, one is SEBI has pointed out the failure of the board members, including the directors, and the directors' names are also mentioned. They are talked about various committees and certain names they are mentioned, and also the red flags are there. Ultimately, if any crime is involved, in that case, the enforcement authorities, the CBI, and FIRs are filed, and charge sheets are filed, and then action is taken. So it is not a regulatory failure by SEBI. What we have seen, there are delays.
Have a national stock exchange sharing the information outside of the organization. Okay, she seems to have shared the organizational structure, the MIS, etc., to an unknown person. Isn't it a issue? So, and NSE is no ordinary company, right? NSE is, after all, a stock exchange. It's a market intermediary, right?
So it's a failure
of a second earlier, if there is information passed, you can have a huge arbitrage opportunities for stock market, right? So that itself give SEBI powers to to further investigate and arrest.
Yeah, so what SEBI has done, it is appropriate for SEBI in such cases to order a forensic investigation, and incidentally a reputed a firm was given forensic investigation, and we have seen in many other cases frivolous firms are given, and they are also pointed out what were the board members doing, what were the independent directors doing. They had access to this information over 4-5 years ago.
Asked the forensic investigation team to track the email ID and identify the person, right?
I think the forensic auditor.
See, today under the IT Act, if you have any, phishing mails or whatever, these strange mails, the police can track the email ID and the person in maybe an hour's time or so, right? This is an investigation which has been going on for 6 years.
True, and the forensic auditor, it is within the scope, as already pointed out. We don't have access to the forensic auditor report.
You name the person, but why should SEBI be shying away from naming the person?
No, it's a forensic auditor has to name the person. The SEBI just reproduces the name. So we'll have to look at it, and what forensic auditor has not done, or maybe the forensic auditor has raised red flags, and now the CBI has stepped in. CBI will be having access to the forensic auditor report, hopefully, and they'll be doing a deep dive and doing appropriate punishments. We only hope the government bureaucracy doesn't put pressure on the CBI and tries to bury the case. That can happen, by transfers of CBI officials. That has happened in the past also. So if the government allows CBI full independence and powers, to take it to one conclusion. So then possibly this crime branch issues of criminal conspiracy or breach of trust will happen, and we'll have to see what happens to the fate of this independent director. They are very powerful people under a very high sphere of influence, and we know the type of power they wield. Mostly the show will go on. Mostly the show will go on. They won't even surrender the remuneration they have got, and the remuneration they have got in crores of rupees. So they will say the CEO and the CEO, so-called, they are got away with so much things. Why don't we get it? What is a few orders here on there? That disgorgement has not happened, and they're very, very powerful people. The show goes on, but what is happening is possibly the IPO of NSE may get delayed. And we talked about the large volumes of derivatives and how SEBI has improved market share, and the Competition Commission has ruled also NSE misusing his dominant role in terms of market share. They have passed an order in Metropolitan Stock Exchange of India case. 850 crore of penalty is payable by SEBI, which they have not paid, and interest of over 10 years has to be paid. This they are just not paid because of muscle power and influence of SEBI board in the bureaucracy. And MSCI has become weak, although it has got very important stakeholders, PSU banks as stakeholders, as large shareholders. This is, as you pointed out, also SEBI has pointed out why NSE has become so dominant and controlled by vested interest and bureaucracy.
Right.
So lots more to come, lots more to happen. Very important parts of the order, 190-page order. We have done a deep dive, and more investigation will happen. Some powerful media sites are trying to do a job, and we should give credit to Hindu Business Line journalist who was the first to write a book on this aspect. A name of Palak is being talked about. Lots of discussions are being held. So we have fearless people in the journalist system also, who are bold and courageous, and they follow it through.
True.
Some time back, nobody had heard the name of Palak. Now, Hindu Business Line, they are also doing panel discussion. Former SEBI chiefs, also very powerful. They have been protected by the government, in fact, former bureaucracy. And their integrity is also in doubt, because and some of these regulators staff, they need extensions also. So sometimes the reports by SEBI officials get buried, but the time is there. The reports are in the system. At the right time, there are some people of integrity who come, and the reports get flagged off and these orders get passed. It is surprising and shocking. Orders have come out, they have been passed, but we have to, as you said, it's the man of courage who has passed the order, and we hope the person who passed the order is protected and not transferred, but get promoted and rewarded. We hope the transparent and honest
Santosh,
people in SEBI
can
are
we
rewarded.
go ahead with the order now further?
Dushyant, actually, I have to. I'll have to. I'll have to leave now. I have another commitment. So.
But it's a
the
wonderful
order is, rest of the order we can cover, of course, next Saturday. But the rest of the order is more of, they have quoted the correspondence between the.
So what is the final order like? What is the final order?
So there is no action as such. It's not that they have given further notices to the 5 to Chitra Ramkrishnan and the Anand Subramaniam and all that. So this is just this
action is they have been debarred from the market for a very short period.
Yeah, and there is a fine
very
of 2
small
crores
penalty
and 5 crores.
Very small penalty compared to the gains they have made. Very small penalty.
That is also a lot of people are not happy with.
Yes, certainly, but the penalty is there and the debarment is there. And with more investigation coming, SEBI has the power based on further investigations, to do much stricter punishment. But hats off to the people who have passed some punishment at least to these powerful people.
No,
as
Manoj ji said, the amount is very less for Chitra because it's just 2 crores. And debarred from market participant. Anyways, as a managing director of NSE, he was not supposed to be, dealing in, the shares which are quoted in NSE. So it's hardly anything.
Yeah, her salary was 44 crores for 3 years.
That's right. So that's why relatively it's very small, as Manoj ji rightly said. So it's not even a rap on the knuckles. It's just a poke, just a mosquito bite.
But hats off to the deep dive discussions we have done in the order. So many points we have discussed. It is suggested everybody should read the 190-page order. Everybody should read and dissect, and we can always do further updates as the investigation progresses. Hats off to you, Santosh. Hats off to you, Dushyant, and Manish, and Dinesh Kotecha, and so many participants. Gaurang has raised so much deep dive insights.
Manish bhai, I have posted one question about ombudsman. Now nobody is mentioning about ombudsman.
Please put on your video, please, Dinesh, and please put on a video. And it's very important points, and we will keep on discussing in the future.
No, 1 second. Please allow me, Please allow me. Thank you. Manish bhai.
Yeah.
On ombudsman. Ombudsman, nobody is mentioning in the balance sheet, and nobody is mentioning in the RHP also. Position of ombudsman. Opening cases.
That is like RBI ombudsman person is there whom you can complain in case your query is not being solved.
Sir, why don't you give the information next week if it is possible?
We'll see that. We will see in that case, because ombudsman is there in the whole bank and everywhere, right?
Because crores of rupees are involved there in LIC. Crores of rupees are involved.
Dinesh, I remember you had done a presentation on ombudsman issue. Maybe you have done it. Maybe you can take your time and come out with several issues, ombudsman, particularly in the banking system, and also this is CIBIL issues. There are so many mistakes CIBIL has given, wrong people getting a very low rating. It is affecting the whole banking system. It needs to be covered. It's a very good point you raised. Hopefully, Dinesh, you can do a further deep down study on the failure of the ombudsman system and how CIBIL is totally recklessly misusing its rating, totally baseless ratings, and banking system is relying on that.
And Manoj, another issue which I want to raise is our physical shares. Physical shares are amounting to not less than, I am told, 2 to 3 billion rupees. 2 to 3 billion rupees. Now that is a big game which is going on, and there is, because my father invested money for me, and now if I am told that you do this and signatures are not matching and all this, so many things are going on, in the physical shares, and the deadline is 31st of March, which is very cruel for people who are having this physical shares through generations, and these laws, are just not allowing some signature differ of my mummy. My mummy had signed at the age of 30, now she's 93. If she signs a signature, it will be different. Now they are putting a problem. Bank and this and that, so many problems they are putting up, the R&D and the companies. It is very, very, very difficult to comply with those. So there's a big issue going on in the fraud of the physical shares now. That will go on, and the R&D people and the company people will eat away that 7 to 8% of the total market cap which is lying still in physical shares. Big
Not
fraud.
only that, this is a very important point. Why people should be forced to convert physical share and pay fees to CDSL and SDL. These are vested interests which are trying to get some pie of the cake. Why should NSDL and CDSL get money compulsory if they are long-term holding? Let the investor decide.
Yes.
So this changes in system should not be forced on any investor. Let the promoter decide whether they want physical share. Even the president of India is holding physical shares in many cases.
Yes, absolutely. I fully. This is a big point to be taken up. Because 2 billion rupees is not a small amount, and 6% of the market cap lying in physical physical shares is not a small amount, madam, sir. Very, very big, huge. And the R&D agents and the company secretaries and the government officials are going to eat away that money. Even the dividends, unrealized dividends, the same thing is happening. Same thing is happening.
A very valid point you raised. It's a big scam that needs to come out also. In fact, Demat holder should get the option to reconvert into physical shares and save the transaction cost.
Yes, but then physical shares are not recognized now for sales. That is the problem.
That itself is a scam because the vested interest, CDS and NSE are profiting because of that. Yes, and even the brokers are profiting because of that.
Yeah, when we write letters, the responses don't come in time, and the last date now is 31st of March to convert all your physical shares to Demat shares. Otherwise, R&D will take away the shares, and then you fight with the R&D, which does not care for you.
No, that will be transferred to IPPF, na? Investors Protection Fund. Those shares will go to Investors Protection Fund actually. This cannot be taken away by the company or registrar, sir.
Money by getting the shares back from the IDFS and the dividend is the very big headache job. Let me tell you that.
Sir, I have done one transaction last week itself. Okay. Like I have my brother-in-law who has changed his residence 20 years back from Mumbai to Kandivali. He had some 106 shares of Everready. Right. So based on physical share certificate, we opened the Demat account. We got to the Everready secretarial department. They have guided us what are the procedures. We have done the procedures. We filled the IEPF form number 5 to claim the physical shares as well as dividend, which was transferred to IPEF department Delhi. And now within a month, we are getting that shares back, and then those will be converted into Demat. We will get dividend back to the bank account also. So there is a process. It is very difficult process. A layman cannot do. I have done because I know the Companies Act, I know the share market, I know the RTA procedures also. One point is very clear. Government should come out with some simple solution, not this Teda Meda solution.
Manish bhai, it would be very helpful to everybody if you can discuss this also next week.
I can definitely, I can give you that process, no issue. I have done practically.
Please.
Yeah.
It will happen as per his own schedule. We have done a wonderful job. I request Dushyant, so many good, important, practical issues raised. Dushyant, can you put on your video on and give your final concluding remarks, and then we close the meeting? Yeah, wonderful interaction, excellent inputs.
Today's meeting as usual was quite interesting with all these, deep dive into the insurance sector results and the IPO, LIC IPO, and of course this NSE order. And a lot of people were they given their impression about the NSE order. So let's be hopeful that in future, the right actions are taken and the culprits are taken. Legally they have been given justice. And so good session overall. Thanks everyone.
Thank you everyone. We are ending this meeting with permission of all. Thank you. Have a nice weekend.